Welcome to Accounting and Tax Made Easy. This channel was created with you in mind. On this channel, we define and teach accounting and tax terminologies in basic language so you can understand these terms easily. Maybe you're not an accountant or finance person, but you really have been wondering what these terms mean. You could also not be finance savvy, but want to have basic definition of these terminologies. You're equally at the right place. Please show some love, subscribe to our channel, share this video with family, friends, colleagues, and please click the like button below. Now we're going to be defining some basic accounting terms, starting with the asset. So what is an asset? To put it in simple terms, an asset is what you own, either as an individual or as a business. An asset usually has economic value and is expected to provide benefits in the future. Examples include a piece of land, a building, a car, or furniture. For a company that prepares financial statements, assets are found on the statement of financial position, also known as the balance sheet. Please watch out for future videos where we will talk about the financial statement in more detail. The next definition is liabilities. A liability is the opposite of an asset. A liability is what you owe as a person or what your business owes. This is usually monies. Liabilities are also found on the balance sheet, and examples include loans, creditors, also known as your account payables, mortgages, and bonds, to name a few. Who is a creditor? Following from the definition of liabilities, a creditor is simply the person you or your business owes. For example, if you take a loan from a bank, the bank is your creditor. Next is the debtor. If you are owed as a person, then the person who owes you becomes your debtor. Therefore, a debtor is a person who owes you money or who owes your business money. A debtor can be an individual, a company, or even the government. For example, if you offer a loan to an individual, the person owes you money and is your debtor. The next definition is expense. This is simply the cost of running a business or cost incurred to generate revenue. Your expenses will appear in your income statement, also known as the profit and loss account. Examples of expenses include utilities, cost of repairs, advertising, to name a few. The next is revenue. Revenue is money brought into a company by its business activities. This is simply the sales from your business. Your revenue will appear in your income statement, also known as the profit and loss account. Revenue means sales and could be cash or credit sales. For example, if you sell a product to a customer, the amount the customer pays for the product is revenue. Even if the customer does not pay immediately, it is still called revenue as sale has occurred. Balance sheet. A balance sheet is one of the financial statements showing your assets, liabilities, and shareholders' equity at a particular point in time. You can call it a snapshot of your current situation or position. Next is the profit and loss account. P&L account, also called the income statement, is one of the financial statements or a part of the financial statement, and it shows the revenues and expenses during a period of time. It shows the profit that you or your business has made by removing the expenses from the revenue. Financial statement, that's going to be our last definition today. It is called the account and is a combination of the balance sheet and the profit and loss account amongst other accounts. So today we've looked at a few accounting terminologies. I hope you've been able to learn one or two things today. And please look out for our next video. We'll be touching on other terminologies in accounting and taxation. Thank you for listening. Do have a lovely day. Bye-bye.